Get ready for the week ahead. I'm breaking down the top economic events for May 11th, only on NorthFlow Finance. Let's dive in. Good morning, I'm your analyst at NorthFlow Finance, and welcome to our Canadian economic update for May 10, 2026. The Bank of Canada has maintained its cautious stance, keeping interest rates steady at 4.5% to combat lingering inflation, currently at 2.8%. Employment numbers remain strong, with the unemployment rate at 5.2%, driven by growth in the service sector. The housing market is stabilizing, with average prices up 2% year-over-year. On the TSX, we're seeing a moderate uptrend, driven by gains in the energy and financial sectors. As we look ahead, we expect the Bank of Canada to continue monitoring inflation closely, with potential for further rate adjustments later this year. Overall, the Canadian economy is showing resilience, but we're keeping a close eye on global trends and their potential impact on our domestic market. As we stand today, May 10, 2026, the global economic outlook is marked by cautious optimism. The U.S. Fed has signaled a pause in its rate hike cycle, providing relief to the U.S. economy, which has shown resilience despite inflation concerns. Meanwhile, China's economic slowdown has bottomed out, with recent data indicating a modest recovery, driven by stimulus measures and a rebound in consumer spending. Oil prices have stabilized around $80 a barrel, providing a welcome boost to energy exporters. However, global trade remains a concern, with ongoing tensions and a slowdown in export growth. As we navigate these complexities, one thing is clear: the global economy is at a crossroads, and policymakers must tread carefully to sustain growth and stability in the face of evolving challenges. The China CPI year-over-year for April is scheduled for release, previously at 1.0%. This data measures inflation in China, which can impact Canadian markets through trade and global economic trends, potentially influencing the Canadian dollar and commodity prices, especially if the release deviates significantly from expectations, affecting investor sentiment and market direction. The China PPI year-over-year for April release is coming out on May 11 at 9:30 p.m. ET, with the previous reading at 0.5%. This data indicates the change in producer prices in China, and a higher reading could lead to higher inflation, potentially impacting Canadian markets, especially those heavily reliant on trade with China. We're watching the U.S. Consumer Price Index release, which measures monthly inflation changes. A higher-than-expected reading, potentially at 0.3%, could strengthen the U.S. dollar, impacting Canadian markets, particularly the loonie, and potentially influencing the Bank of Canada's future rate decisions, affecting Canadian interest rates and overall economy. At NorthFlow Finance, we're analyzing the U.S. CPI year-over-year for April, releasing May 13 at 8:30 a.m. Eastern Time, with the previous and forecast at 2.4%. This data indicates inflationary pressures, and if it meets expectations, it may have a limited impact on Canadian markets, but any surprise could influence the Canadian dollar and interest rates. The Canadian CPI MOM release for April is set to drop on May 13 at 8:30 a.m. Eastern Time, with the previous reading at 0.3%. This data measures the monthly change in consumer prices, and it may impact Canadian markets by influencing interest rate decisions and the value of the Canadian dollar, so investors will be watching closely for any deviations from the forecast. The U.S. PPI MOM for April is set to release on May 14, with a forecast of 0.3%, a significant increase from the previous -0.4%. This data measures the change in prices of goods and services produced by manufacturers, and an increase could signal inflationary pressures, potentially impacting Canadian markets, particularly the loonie and trade-sensitive stocks. NorthFlow Finance, the U.S. retail sales month-over-month for April is out, showing a significant drop from 1.4% to a forecasted 0.0%. This data suggests a potential slowdown in consumer spending, which may impact Canadian markets, particularly those closely tied to U.S. trade, as a weaker U.S. economy can lead to decreased demand for Canadian exports. Initial jobless claims in the U.S. have been released, coming in lower than forecast at 189,000, versus the expected 205,000. This data indicates a strong U.S. labor market, which may lead to higher interest rates, potentially strengthening the U.S. dollar. This could impact Canadian markets, particularly the Canadian dollar, which may weaken by up to 0.8% against the U.S. dollar. At NorthFlow Finance, we're awaiting the U.S. industrial production release on May 15 at 8:30 a.m. ET, forecast to rise 0.2% month-over-month. This data measures changes in output, impacting Canadian markets through trade and investment, potentially influencing the loonie and TSX, as a strong U.S. reading could boost Canadian exports and economic growth. The Michigan Consumer Sentiment Release is a key indicator of U.S. consumer confidence, and a reading above the forecast of 50 could boost stocks, potentially having a positive ripple effect on Canadian markets, while a lower reading may lead to decreased consumer spending, affecting trade and impacting the Canadian economy by as much as 1.5%. Thanks for watching. Don't forget to subscribe, and remember, this is not financial advice. Consult a professional before making investment decisions.